Hello everyone at Crypto News. Today is November 21st, 2025, and the top crypto news is as follows, and we'll quickly start with our ETFs. With Bitcoin Spot ETF on November 19th, we had a total positive inflow of $75 million because Nvidia did well, but on November 20th, with Bitcoin so low, we are at negative $903 million. For Ethereum ETFs, let me tell you that we are generally in the red. On November 19th, we are at negative $37 million, and on November 20th at negative $261 million. Now, speaking of the XRP ETF, yesterday Bitwise launched, and on its first day of trading, it closed with over $22 million in trading volume. The image you see is 2 hours before the close. The ETF is actually trading, which is why I put more numbers in. Let me tell you now that the total XRP ETFs on November 20th closed with $118 million in volume, much higher than the volumes of Solana, which only closed at $20 million. Continuing with our ETFs, I will tell you that 21 Shares is bringing various ETFs to Europe in the form of ETPs, and is bringing Aave, Cardano, Chainlink, and Polkadot as ETPs for European citizens. Moving on now to ARK Invest, which is seeing the lows and buying $39 million in various stocks such as Circle, BitMine, and Bullish. Since the cryptocurrency market is volatile, stocks related to cryptocurrency companies are obviously volatile. And now let's go straight to our favorite cryptocurrency market. With Bitcoin at $85,000, we broke our support yesterday and are now at the old support, which is around $87,000 to $85,000. And now it's time to talk about what exactly is happening. First, let me tell you that liquidations have caught fire once again and have exceeded $1 billion as we speak. Moving on, let me tell you that very loyal Bitcoin players are slowly abandoning it, as there is a phalanx according to ARK Intelligence that claims to have sold its entire $1.3 billion worth of the cryptocurrency, which it had held for 14 years. Meanwhile, Marathon Digital, one of the largest miners in Bitcoin, is also moving its BTC to Falcon X and Coinbase Prime. He transferred 644 BTC worth $58.7 million. In this case, let's say the amount is very small, so because they are miners, theoretically they are always selling to pay for the electricity and the workers and so on. They don't have to sell because the market has crashed. The amount is very small for such a company. Moving on now, we're gonna go to Mr. Tom Lee, who owns BitMine and claims that behind the market crash that we're having, there are injured market makers. Basically, I'm going to start by telling you that this user here, Mr. Mike, is saying that they're trying to manipulate Bitcoin and drive down the price with futures and other such tricks to scare people and ordinary investors into selling. And as this user says, he's saying that right now they're running one of the biggest scams that he's ever seen in the history of marketing. And everything that this user said, Mr. Tom Lee took, and he just said, I agree, but I have something more interesting for you. And this is an interview that this person did, and he explains what's going on in the market based on what he knows, and it's something worth listening to. So
Steve said, I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade, almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect they would have pulled pricing from across exchanges to set the price for that stablecoin rather than relying on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software.
So, in short, what Mr. Tom Lee is saying is that because in October we had the largest liquidation in the history of the cryptocurrency market, close to $20 billion, there are a lot of market makers who are hurt and looking for ways to make extra money. And he also told us that these market makers have a stable coin that was in trouble, from what I understand. Obviously, he can't name names, but what's happening is that there are a lot of hurt players in the cryptocurrency market, and a lot of big players who are trying to make money. We don't know if that's true. The only thing that's certain is that on that day, October 10th, there were definitely a lot of people who were hurting. Also, as he said, for this to break down, it takes 8 weeks, and we're at 6 weeks, so based on that, in 2 weeks, we could theoretically see more green days. But all of that, again, nothing is certain, and beyond the so-called Mr. Tom Lee, which some might say might be conspiracy theories, we're going to go into economic reasons why the market is weak. And let me tell you, the September issue came out late. How many jobs the US added? And they added 119,000 jobs, way more than expected. They were expecting to add 50,000 jobs. That's good for the US economy, but as we've said before, it gives Mr. Powell an extra incentive from the Fed not to cut rates, which is what we want. The probability of a rate cut has dropped below 30%, and I'm showing that in an article, because right now the probability of a rate cut is 35.6%. Economy, but as we've said before, it gives Mr. Powell an extra incentive from the Fed not to cut rates, which is what. And as we've said before, we want to see interest rates cut so that when they get too close to zero, that forces the Fed to start printing money. But for that to happen, the Fed has to cut interest rates so that it can print money, which is what we expect. And with the US having strong jobs, we're less likely to see those rates cut. So based on all of that, that wraps up the top news for crypto today, November 21st, 2025. I'd like to remind you that the content you just watched is created for educational purposes only and should not be considered as investment advice, but rather as investment opinion. Please subscribe to the channel, leave a like, and feel free to comment. Take care, everyone, and have a good day.